Is the premium and luxury market in the greater Philadelphia area slowing? I've got some data that will answer that. So if you get some value out of this or you like what you hear, make sure to subscribe to the channel, hit the bell for notifications. And if you want to schedule a call with our team about how to navigate the high-end market in the main line, Chester County, Delaware counties, Montgomery County, or even in the city of Philadelphia, you can schedule a link in the comments and we'll tell you exactly what you need to know. Is the high-end and premium market slowing? Well, there's some Zillow data out there, ladies and fellas. The luxury housing market lost momentum in April. Zillow's identifying financial uncertainty as the reason for that. That's causing many high-end buyers and high-end sellers to hold off on transactions. So this is a headline here. And even despite the headline, nationally, luxury home values increased 2.7% year over year, about double the growth for the broader market. And they're defining this as the top 5% of home values. And they call it luxury home. It's not the $1 million budget. It's actually valued at $1.8 million and up. And despite the slowdown in sales, prices have continued to rise. So don't buy into these headlines would be the first and foremost thing I would tell you here. There was a little bit of an uptick in March. We saw luxury home sales going under contract. They rose 30% from February to March, but activity dropped in April. And look, there was a lot of noise about the trade wars and different things that may have had something to do with it. And instead of going to their report, I'm going to tell you what happened in Chester, Delaware, and Montgomery counties for $1 million plus home sales, because hearing prices went up, but it's taking longer to sell. Well, that's normal in the high-end market. If you figure the top 5% of homes, well, what I know is the median income in Pennsylvania is just under $90,000 a year. You get two earners like that at the median. That puts you at $180,000. And typically people will buy homes 4 times their annual income. So that comes out to around $720,000 as that like middle median number when you do the math. It's 180 times 4. That's how we did it, just so everyone's on the same page. So if you look at last year versus this year, if you look at 2024, there was an average of 119.4 homes that went under contract above $1 million in the Tri-County area, above $1 million. That was in 2024. In 2025, we actually saw more than that. We saw 126.8 properties sell above $1 million. So I would say this is probably about flat. I mean, we're not going to go back and forth about an average of 5 or 6 more homes here. It's pretty flat. When you're looking at the number of properties that sold at the median, in 2024, it was less when you take the median number. It's 87 versus 107. I'm a big believer in average, so we're going to look at average as flat. What we're also seeing is the average sale price, the average sold price when it closed in 2024. That number was $1,525,317. In 2025, that number is $1,487,672. So again, you could say that's probably about flat. There's a wide range of these properties in terms of square footage and acreage and different things once you get above $1 million. So the market's been relatively stable. Now, the big difference is when you look at the number of units that were listed. So May of this year compared to May of last year, we saw 350 new listings come to the market compared to 319 in 2024. In April, it was 316 in April 2025 compared to 284. 278 in March compared to 221 last March. And February and January were about the same at 190 and 176 and 149 and 148. So we saw more homes get listed this year, and that's why you're seeing the prices come down a little bit. Then what I would tell you is you got to look at the local markets here. This is covering many townships, many school districts, many areas. So you got to be careful when you see these headlines here, because what we know is we've got a lot less inventory than these other markets that we're being compared to nationally. If you look at Zillow's heat map, Nick's going to put the chart up here. You can see we're still a very seller-friendly market compared to the rest of the country. So when you see these headlines, be a little careful here. Now, what we know is in terms of days on market, the cumulative days on market is also almost identical compared to last year when we're above $1 million. It was 43 both in 2024 and 2025. So, I mean, there's a couple fractions there or some decimal points, but we're seeing it's taking about the same time to sell. And I know when we get above 2 million, that days on market goes a little longer because there's going to be less and less buyers as you climb up. So the myth here is that the high-end market is starting to soften. Now it's taking longer for homes to sell. Appreciation's certainly not as fast. We saw the average sale price drop down by $38,000, which is, not insignificant here. And it's relatively flat, but we're seeing about the same amount of activity. The difference is there's more supply, and supply is growing right now. So the good news is if you're looking to move up, there's more inventory here than there may be in the current segment of the market where you live, where it's still really competitive. It's all going to depend on your financials. And that's all the more reason when you're thinking about making a move, whether it's to the premium luxury segment of the market or somewhere else, you want to get some local advice of people that can navigate this data with you.